Alright, so Bandman Kevo, welcome back to my YouTube channel, man. Today we got my boy Aristotle on here, man. We finna learn option trading. So let's go.
What's going on? It's your boy Aristotle. You already know what's going on. I'm about to teach your boy Bandman Kevo how to get started trading and into the stock market. Let's get it. So this is all you really need to option trade. You need a laptop and a secondary screen. So you could have two computers or two monitors, but all you need is one screen to enter and watch a little bit of news or flow, option flow, which I will be explaining next. And then the other screen you need is one to actually look at charts. So this is the first screen I'm going to show you guys. We got to go over a few basic stock market terminology, right? So stocks are the capital raised by a company through the issue of subscription of shares, and buying one share makes you a shareholder. So if Apple is priced at $100 and you buy one share of Apple, you own a piece of that company outright. So you buy a share. Right now, if Apple goes up to 101, you have made $1. But with options, we are buying contractual agreements with the company.
All right, so listen, for somebody who don't know anything about stocks, the best way for them to start to get, like, what's a good app, first of all, to get on if they want to jump into stocks?
So the first app I would say they need to get on, my favorite for one, top three, is Thinkorswim. Second is Robinhood, which they're on the way. Now granted, Robinhood gets a lot of scrutiny, but it's very easy to use and it has a great user interface. It looks appealing to the average user. And then the third one would probably be Tastyworks or Webull.
Okay, let me ask you a question. Why do you say these apps are good to you? Like what do these apps offer?
Okay, so Thinkorswim, this app allows you to actually enter and exit trade very quick using this program we like to use called Active Trader, and they're powered by TD Ameritrade, which is a bank. So you can literally walk into a TD Ameritrade depending on where you live, and you can call them. They have great customer service, they have in-app charting, they pretty much have everything. Thinkorswim is a jack of all trades. And then I would say Robinhood isn't a jack of all trades, but it's very mobile friendly. So you can walk around using Robinhood. As long as you trade in shares, Robinhood is good. If you're doing options, Thinkorswim is good for both shares and options. Honestly, the best one. You do Thinkorswim, you can't go wrong.
Okay, and so that's for apps. So if somebody finally got an app and they get on the app and they see all this stuff, you know, it looks like a whole lot of stuff that they don't know.
Right.
Where would you go from there as a person, like starting from the beginning? You know what I mean? Like,
right.
What do I do if I didn't know anything about stocks or shares or option trading or anything like that? What would be the first investment you think? You know, even though we not financial advisors or anything, we just, you know, doing this video for entertainment. But if I only had $5,000, what should I put my money into?
So if you only got $5,000, we speaking as, and this is a great day, because people always remember this day. This is February 2nd, 2022. So no matter what, when they look at this day, they can go look at the chart of what's happening on February 2nd, 2022. So right now you got $5,000. There are lots of companies on sale today as of February 2nd, 2022. You got Facebook, which is under $200. You got SQ, which is owner of Cash App and Square Cash, you know, that you swipe the card, small businesses use. PayPal is also very undervalued. Then you got a lot of good companies that are undervalued. So tech is very undervalued, and Google is going to do a stock split. Google might be priced at around like 100, like they're doing a 20-to-1 stock split. So meaning they're going to divide their shares into 20. So they might be, you know, in the hundreds. So Google, tech, really tech is good. Buying tech on the dip. And the S&P 500, like SPY. People always like to invest their money into them and hold long term. But you can also buy other ETFs. And that's a good, people like the safe route too. The safest route to go is ETFs. And ETFs are called exchange traded funds, which is pretty much like the S&P 500. The S&P 500 stands for Standard & Poor's 500, which is pretty much a company that buys 500 stocks, and then those 500 stocks can be actual, like, traded as a company, which is called SPY. And you can invest in that company and get exposure to all the other companies. So they have tech ETFs, and the tech ETF will literally buy a whole bunch of shares of Apple, Google, Facebook, Microsoft, all these companies, and then you don't have to actually invest in those companies. You could just buy into somebody who has a fund who invests in those companies.
Okay, so if I'm just jumping into shares and stocks and stuff like that, what do you think that is smart to buy? Like, you know, should some people get in and get 1 or 2? Should they get 10, 100, 1,000?
I believe buying tech stocks, profitable companies at a discount will always make you money. Like, if you were to buy Facebook for under $200, you will make money off of it by holding shares one day. If you buy,
like, how many?
So Facebook is under $200. We got $5,000. We should diversify our portfolio. So 1,000 into some tech, right? So now, honestly, we should go half in tech.
1,000?
Nah, we should go half in tech. We should go 2,500 into tech, and the other 2,500 into maybe dividend and slow growing stocks, like stuff that's going to generate passive income. So this is why I believe the stock market is the cheat code to wealth. Because, okay, especially right now, if you were to invest right now, because let's just say you got 100K, because we know you got money. So let's just say you put up 100K to get your feet wet, right? We divide that 100K. Instead of letting your money sit in the bank, right? It's almost like investing in crypto, but these are assets. So it's like you beating inflation. You're beating it because you're buying Facebook for under $200. You know it's gonna go up to 400. Facebook gonna stock split again one day. It's just a powerful company. They on Instagram, Facebook, Metaverse, all of that. Disney, that's a good company to invest in. Disney under $200. You can run their balance sheet. I can simply show you how to look at a company's balance sheet and to tell if they're profitable. You know what I'm saying? So buying.
What for a person that don't know what a balance sheet is? What is a balance sheet?
So a balance sheet is all companies have to report their 10Q, which is their quarterly earnings, and then their 10K, which is their yearly earnings. So every quarter, if you are an IPO, right? So if your company actually goes public, right? Initial public offering is what our IPO does. You have to report your company's earnings publicly. Everything, your debt, your everything, your revenue, your debt, everything has to be reported on a balance sheet. So people like you and I can go check any companies who is a publicly traded company, and we can go check their balance sheet, what they're spending their money on, everything. So everything gets laid out on the table when someone IPO. So that's a good thing for you and I. It'll also teach you and I how to actually run business. Because now we watching patterns. I'm watching how Facebook losing money from doing this. So I look at my business and say, okay, all right. You know what I'm saying? So that's another reason I believe everyone should be in stocks, because it'll help you be more equipped as a business owner as well. But yeah, like for instance, I just went to show him Facebook's balance sheet. I went to show him SQ's balance sheet. You wouldn't notice it, but like Square Cash ain't really as profitable as you would think they are. You know what I'm saying? As PayPal. You know what I'm saying? And then DraftKings, they're not a profitable company. Snapchat, they're not profitable. You know what I'm saying? Twitter isn't profitable. I just looked at their balance sheet. Cruise lines are not in profit at all. So you know what I'm saying? So you just gotta go look at, instead of what's popular, you gotta go in and look at somebody's balance sheet. And I can literally show you like a brief balance sheet, and I can explain it literally under a minute, under 60 seconds, on how to quickly tell whether this company is profitable or not.
Okay. So as far as with stocks, what's the negativity part of it?
Ignorance is the negativity part of it. Like, all you really need to know to get started in the stock market is like the basics, fundamentals. Fundamentals is the study of their balance sheets and the background, like the pretty much looking at their expenses and data. Technicals is looking at the actual chart and watching patterns and trends. So technicals is going to show you where to enter. Fundamentals is going to show you whether you should hold them for a long time. So fundamentals is the study of their profitability, right? Because that's all you're trying to see is how profitable they are, and and you need to see cash flow. That's what I'm saying. So I can show you how to watch to see if a company has actual cash flow. So now that you know how to see if a company is profitable, now you go look at the chart and say, are they at a significant dip, right? So Facebook fell 53% from highs right now, probably close to 60 right now, right? Or whatever percentage they fell from high. Don't quote me on that, but I can go and check. So Square Cash under $100. You know what I'm saying? So you gotta go look at somebody's future and their balance sheet and their track record of being profitable. So it's almost like somebody coming to you and saying, Bandman, Kevo, I got this tech company, because I'm sure God came to you before. I got this tech company. All we need is investment. All you gotta do is say, okay, let me see your balance sheet. Let me see how many quarters y'all been profitable. Who's your CEO? What's his plan? What's y'all revenue? What's y'all profit margin? Meaning, after everything is taken away, how much are y'all profiting? You know what I'm saying? So when I hit guys with that, that's when they back off. So that's what the stock market is teaching you. How the billionaires run their companies, and then you can literally go and see it. It's public information. So that's why a lot of companies don't want an IPO, because they don't want people in their business. You know what I'm saying?
Yeah, that's what's up. IPO. So I know we talked about the negatives. You know what I mean? So like I said, even though a lot of my fans, I know they want to hear the positives, but
right. We can go with some more negatives, plenty.
I know it's always, when it's good, it's bad. You know what I mean? A lot of my fans and my followers, they beginners. You know what I'm saying? So when they get into something, they don't be knowing too much. And that's the reason why they watch my channel and stuff like that, because I put them on game. What is any, super finesse secrets you can put them on that other guys, because there's plenty of guys on YouTube that talk about, stocks and trading and stuff like that, but can you give them some real sauce that don't nobody else know about, that they'll just always remember you for, man, he gave me some real drip, you know what I'm saying?
Right.
Because I be giving some sauce in my videos, you feel me? So I'm just what can you tell them that can really always go back and look
get from nobody else.
They will always go back and look at this video and say, dude gave us some real, they gonna be thanking me. They gonna be tagging me and you saying, man, hey, he gave us some sauce.
Okay.
Whatever it is, because like I said, if I wanted to look back at this video and I wanted to go follow every step that you told me, I wanted to say, okay, these are the apps. This is what he told me to look into. This is what the sauce he gave me. Whatever you think,
Alright, he told me to give y'all some sauce. So, first of all, this is everything you need to learn to be profitable in the stock market. One, you need to actually download an app, right? Now, the first thing is you need to learn the fundamentals, right? So the fundamentals is just to quickly see if a company is profitable. So first of all, let's go over some quick fundamentals. So we're about to go over and look at some quick fundamentals. That's the first thing you need to do in order to learn to see if a company is profitable. Step one, let's go and look at a profitable company and a non-profitable company. So we're going to go to this app called Simply Wall Street, right? Simply Wall Street is a great fundamental breakdown app. The first thing we need to know is I need to teach you guys how to see whether a company is profitable. This is the sauce. So Facebook, let's go to Facebook. They are called Meta Platforms. All I'm going to do is scroll down. This thing quickly gives us a nice little quick fundamental balance sheet. So boom, last time Facebook reported earnings. So this is what Facebook did. Revenue. Facebook brought in 117 billion and they spent 22 billion to do that. So that is extremely profitable. And they gross profit was 95 billion. And then right here, the other expenses. So this could be, who knows what this could be? This could be ads or whatnot. This could be whatever to push out. And this could be buildings, employees, other expenses. All of these are just expenses, whatever expenses they have, right? And then the earnings. So they profited this. You know what I'm saying? After everything is said and done, Facebook has a 33% profit margin. Let's go to Snapchat, which is also in their industry. We're going to go to Snap and Twitter. So we go to Snap, you see Facebook has a 33% profit margin This is how much they profited. Let's go to a company like Snap. That's how they did. So, revenue. Snapchat brought in $4 billion. They spent 1.75 to bring in that $4 billion. Then they profited 2.4 billion, but other expenses added up to 2.9 billion. So they are $500,000 in the hole as of their last reported earnings. See what I'm saying? So they are not profitable. Will they be good for the long term? You can go and keep checking to see their data, what they've been making off Simply Wall Street. Let's go to Twitter, right? A non-profitable company as well. So just because somebody's popular does not mean they're always profitable. Now granted, they're only 200 million in debt after all expenses, after looking at that, right? And they also give you valuation. So they say, okay, based on their balance sheet and everything and their future projects, they like to give you a fair value as well. So this is good sauce right here. Going to this app, seeing if this company is profitable and what type of revenue they're generating and their gross profit. That's step one. Fundamentals, some basic quick fundamentals. And I can break down more if whatever you done like courses, whatnot, I can break down more. This is a great fundamental app for you. So that's step one, fundamentals. Step two, technical. So after you learn the fundamentals, whether the company is profitable, this and that, now you need to go look at their chart. You have to download this app called Trading View, right? So now that we see that Facebook is profitable, now we need to see if they're at a dip. So now I want to give you the second piece of sauce, quick sauce. You can always come here because that's what Bandman is. Trading View. Now I bought the actual subscription. So you're looking at my live chart. You want to see a lot of stuff going on. So let me go to one that I didn't put that in the live. You need to download the Trading View app. And you need to go and see where your company is. Now let's go to the second piece of sauce. How far did they drop from the highs? Correct? So look at this. This is the highest point. If you notice, when you're long-term investing, this is the best piece of sauce I can give anybody. This could be Bandman, Kevo, this could be whoever I'm talking to. So I'm gonna take off all my indicators. If you're a millionaire, you got millions, you're gonna go to first see if the company is profitable. But you can go check flow or whatnot too. But you need to go and see. Let's go to Facebook. So look how far Facebook is from the highs. So you take the highest point of the chart, you go to Facebook chart on Trading View, you will see that they had a high of around, you can see the high up here, the H. Facebook had a high of around 384. And now they are at 202. So they are $182 from highs. That is a huge discount. Now let's go look at their historical data. We can go to the weekly chart. So every candlestick you see on here equals 1 day. Right? So we can take off all of this, correct? And we can go and check their historical data. So this is why I say you always buy drops from the highs, right? So notice how when it dropped a lot from the highs, if you bought that dip, you be rich. You see how the highest point is right here? You buy the significant drop, you're rich. You see this high? You buy the significant drop and you're rich. So you want to buy profitable companies at extreme discounts. I just showed y'all how to see whether a company is profitable. Now I'm telling you, you buy. So Warren Buffett once said, buy when they're fearful, sell when they're greedy. So everyone was greedy at the highs. Everyone is fearful right now because of the war, because of everything that's going on. That is when you buy. You don't buy when everyone is talking about it and it's on Twitter and everyone is saying you're missing out because we bought this dip back in February 2nd, 2022. You don't want to be this. You don't want to be that guy. You want to be this guy. This is where you buy in. You buy when the world is fearful. Everyone is scared of Facebook. So guess what I did? Start buying. See what I'm saying? And right here, this was COVID's drop. This is when COVID dropped. Everyone was scared here. You want to buy at significant dips from the highs on profitable companies, because Facebook has a track record of returning your money back after you buy the significant drop, correct? So this is a great buy for Facebook. Look at where Facebook was in the 200s. The value was there. Facebook showed you what it can do, and it also shows you a track record of profitability. Now, the second thing is you actually need to learn these charts. Fundamentals is easy to learn. It just takes time. You need to go and read a company's balance sheet, and you can read a company's balance sheet on sec.gov or Simply Wall Street, which is that app. Third thing you need to learn is these candlesticks. Candlesticks is number 3 you need to learn. So after you learn how to actually see if a company is profitable, and you need to go, and another thing is that second gem I gave you is buying profitable companies from significant drops from the highs. You need to actually go and learn what's on those actual charts. So if you want to be a day trader like myself, you need to be able to know candlesticks, support and resistance, volume, all of that. And I can quickly teach you candlesticks, support, resistance, and volume. So this is for day trading. So I taught you guys a little bit about long-term trading and how strong investors like myself go look at it.
What is candlesticks?
Candlesticks are pretty much how we see psychology in the market, how we see like what's going on. It tells you what happened in a time period. So let's just say we're looking at the daily chart. Every candlestick represents one day from 9:30 Eastern time to 4 p.m. So within one day, right? Let's just give out some ballpark numbers. The prices open at 10, right? The stock opened at 10. Then it went as low, so it'll open here. Then it went as low at 7, but then it went as high as about 15, but closed at 12. See what I'm saying? So it opened at 10, went as low as 7, went as high as 15, but closed at 12. So the relationship between the open and close is called your body, correct? So the relationship, so 10 and 12, that's your body. So in order for it to be a green candlestick, it must close higher than it opened. So if it opened at 10, it had to have closed at damn near 10.1 to be green, but it would be right here if it closed there. So wherever it closes, whatever is above the close will be the wick. These are called your shadows or wicks. And wherever it open, whatever is below it or something like that will be called your lower shadow. So opposite for red candlestick, right? Within one day, let's just keep the same prices. It opened at 12, went as high as 15, went as low as 7, but closed at 10. You see what I'm saying? So that's what happened within one day. Now let's just say that was a 5-minute chart, right? Every candlestick represents 5 minutes. If that was an hourly chart, every candlestick will represent what happened within 1 hour. If we go in and see this big candlestick, I'll know that it opened here, went as low as here, right? But went as high as here, but closed here. See what I'm saying? And then if it was a red candlestick, I'll know that it opened here, went as high as here, went as low as here, but closed here. So all that stuff you see is pretty simple, as long as you understand that what time frame it represents. And then it showed you psychology. You see what I'm saying? So let's go over this one. Let me give you some quick high probability stuff. So if you guys want to know the trading secrets, Bandman told me to give you guys some trading secrets. So right here, this is called pin bars. These are the most high probability candlestick on the market, and they are high probability whether they're at supports or resistances. So bullish pin bars are high probability at support. So let's just say you have a downtrend right here, right? And then this is another downtrend, right? But let's just see what this candlestick does, right? So this is a downtrend. This was once a red candlestick, right? So it opened here. The bulls were the bears. So bears represent stuff going down. Bulls represent stuff going up. So bears strike down, bulls strike up. So in the stock market, that's what you'll see when you see bullish and bearish. So a bull market is when prices are going up. Bear market is when prices are going down, right? So it's just off there fighting a attack style, right? So now you see that we have a bearish downtrend, correct? Now this was once a red candlestick, but bulls went and bought the prices back up and then made it pretty much flip around. So this represents a very bullish candlestick, and it's very bullish when it's at support. Now they can be called hammers or shooting stars, but the only difference is these have what you call shadows on the top. So that's what they're called pin bars. Now imagine this is a green uptrend, right? So all candles are green. Now this was once a green candle. So it opened here, and then it was going high at first, right? But then the sellers came and made the prices shoot right back down. And then it went lower than what it opened and then closed here. So that represents a bearish sign. Here is opposite. This was once a big red candlestick, then it turned around and turned green. So now it's a pin bar. So let's look at some examples. Sometimes I like to call them lollipops with rocket ships on them, or astronauts bending their knees and jumping as high as they can. So right here, right, as you can see, if we were to draw an imaginary line straight across, we have a pin bar right here at that same support. So support is your floor, right? We have a pin bar here. Look what happens after a downtrend. This was once a red candlestick, but then the bulls came back to buy it up at support, and then look what happened. Prices shot up. We can look at another example. This is a nice support line, as you can see, where stocks like to bounce from. So this was once resistance, and then when it broke, it became support, then it bounced again. Support, bounce. But you see right here, we have a pin bar at support. So whenever you have a pin bar at support, that is a bullish sign. See what I'm saying? And then both pin bars are equal. So whether it's red or green, they're positive. So as you can see right here, this is a green pin bar at support, but you want them at drop. So we were to draw an imaginary line going across right here, you would see a red pin bar and a green pin bar. And then that's pretty much it. And then we have this too. So another pin bar. And then we have bearish pin bars, right? And you need to see bearish pin bars falling from resistances where there are multiple touches. So this is a resistance point. This is a support, right? Now, this is an engulfing pattern where the real body engulfs this. You know what I'm saying? So I like to look at these as Pac-Man. So it's when the second day engulfs. So today would have to engulf yesterday in order for it to be an engulfing. So what that represents is, think about that, the psychology of the market. If there's a whole bunch of red candlesticks coming down, and up in here, the bulls or the bears, so bears represent stuff going down, bulls represent stuff going up. So bears strike down, bulls strike up. So in the stock market, that's what you'll see when you see bullish and bearish. So a bull market is when prices are going up, bear market is when prices are going down, right? So it's just off there fighting a attack style, right? So now you see that we have a bearish downtrend, correct? Now this was once a red candlestick, but bulls went and bought the prices back up and then made it pretty much flip around. So this represents a very bullish candlestick, and it's very bullish when it's at support. Now they can be called hammers or shooting stars, but the only difference is these have what you call shadows on the top. So that's what they're called pin bars. Now imagine this is a green uptrend, right? So all candles are green. Now this was once a green candle. So it opened here, and then it was going high at first, right? But then the sellers came and made the prices shoot right back down. And then it went lower than what it opened and then closed here. So that represents a bearish sign. Here is opposite. This was once a big red candlestick, then it turned around and turned green. So now it's a pin bar. So let's look at some examples. Sometimes I like to call them lollipops with rocket ships on them, or astronauts bending their knees and jumping as high as they can. So right here, right, as you can see, if we were to draw an imaginary line straight across, we have a pin bar right here at that same support. So support is your floor, right? We have a pin bar here. Look what happens after a downtrend. This was once a red candlestick, but then the bulls came back to buy it up at support, and then look what happened. Prices shot up. We can look at another example. This is a nice support line, as you can see, where stocks like to bounce from. So this was once resistance, and then when it broke, it became support, then it bounced again. Support, bounce. But you see right here, we have a pin bar at support. So whenever you have a pin bar at support, that is a bullish sign. See what I'm saying? And then both pin bars are equal. So whether it's red or green, they're positive. So as you can see right here, this is a green pin bar at support, but you want them at drop. So we were to draw an imaginary line going across right here, you would see a red pin bar and a green pin bar. And then that's pretty much it. And then we have this too. So another pin bar. And then we have bearish pin bars, right? And you need to see bearish pin bars falling from resistances where there are multiple touches. So this is a resistance point. This is a support, right? Now, this is an engulfing pattern where the real body engulfs this. You know what I'm saying? So I like to look at these as Pac-Man. So it's when the second day engulfs. So today would have to engulf yesterday in order for it to be an engulfing. So what that represents is, think about that, the psychology of the market. If there's a whole bunch of red candlesticks coming down, and next thing you know, you have one body of a candlestick completely eat that body, that represents a sign that the trend will reverse. See what I'm saying? So this is an engulfing pattern. And that's when the body of this candlestick completely eats that body. And then the bearish is when the red candlestick completely engulfs an uptrend. See what I'm saying? So let's look at some examples. We have a downtrend. And next thing you know, we have an engulfing pattern here. And then prices go up. And then I tell people, it's like if you were to eat the body of a spider with the legs hanging out your mouth. So what that means is, no matter how big these shadows go out, the body is what counts. Just the body has the engulf. See what I'm saying? So, and then engulfings are best off 200 moving averages, 21 MAs, and even 8 MAs. They're best off high probability moving averages. So that's a play for you guys. And then you have harami patterns, which means harami means pregnant in Japanese. So harami means pregnant in Japanese. So right here you have red candlesticks, right? And then you have a small one within it. Now this isn't as high probability as the engulfing or the actual pin bars. It's the second highest probability, or the third really. It's the third highest probability candlestick. So I recommend you guys only using pin bars and engulfing patterns as what you'll use for high probability setups. So pin bars, engulfing.
So what is support and resistance?
So support is your floor and resistance is your ceiling, right? So right here we can draw a line and we can get some quick ceilings and support. So right here would be a support. Why? Because we have, this could be your support. So this is support. This is also a support because it's the bottom. Even right here, this is now support. So support will always be your floor. And resistance will always be your ceiling. And support can even be diagonal, meaning this could be support because we have bounces. So what you're looking for is bounces from lows. And when things break support, that represents a downtrend. So right here, Facebook was once in a uptrend, and then it broke support, came back and retest, and fell. So this is once a support. What else could be? This could be a resistance point right here. So every time Facebook, at one point in time, every time Facebook hit this line of resistance, it fell. At one point in time, this was a good support. Every time Facebook hit this line, it bounced. And then even here, this was a resistance point. Every time Facebook hit this line, it dropped at one point. Bounce from, so if it bounced from highs, it's resistance. If it bounces from lows, it's support. So this was once a nice uptrend for Facebook. Support, bounces, bounces, bounces. So that's all that junk is.
Yes, sir. So, man, yeah, I feel like, so if I want to learn more about, stock trading, man, where can I go, check you out at, man?
So if you wanted to learn more about stock trading, you would go to AM University. We have a beginner's boot camp course where we teach you the basics, just if you want to get started right away. And then we also have an advanced course where we actually teach you live via Zoom, and we let you answer questions after every lesson, right? We have a course live via Zoom where we let you ask us questions after each lesson. And then we also have a bundle where you can buy two at the same time. And I also get a free game on my YouTube, and I also tell you what I'm watching every single day on my Instagram, every week, every day in my chat. I also teach you what I'm watching. I give option trading plays, whatever people need to get started in the stock market. I have whether it's fundamental, you want to learn how to actually read a company's profitability, we offer that. We also offer day trading, option trading, whatever people need. We do anything you can think of, whether it's bounces, where we actually tell you the level where we're going to catch the stock. So this is how bounces work. I also want to tell you that this is something you would be interested in if you ever want to just make some quick money. Let's just say just some snack money. I want trading to pay for my food per year, right? All I would say is, well, for you personally, you probably don't want to watch the stock market, do you?
Not really.
So if you don't want to watch the stock market, your best bet is to S&P 500. You heard of that, right?
Yep.
All you got to do is wait on this bad boy to do something like COVID again. If this does this again, even I'm going. But so this was when COVID happened. And this is when the trade war was happening, when Trump was going at it with China. This is the COVID. So if we get anything like that again on the S&P 500, this would be golden. We can even get to the 300 again. That would be golden. You know what I'm saying? So your best bet is to wait on the moment where things are extremely bad. But tech is a good buy right now, like Facebook, Square Cash, PayPal, stuff like that. But your best bet would to buy ETFs and safe ETFs. Like, I can let you on some games. DC Young Fly, this was 5 months ago. He told me, hey, help me invest $1 million. It's now his account now is at 1 point. He made 120,000. This is what I showed him long term, and that was 5 months ago. So basically, I told him but that was 5 months ago. So imagine what that's going to be. Then I set him up. So for instance, for you could make $100K a year. So how much do you have to spend in dividends to make $100K? I would say a year for letting so think about it. Your millions could sit in an account and make $100K guaranteed with the stock market. So guaranteed money comes from either dividends or bonds, right? So bonds is something you can invest in to where they give you a set rate, right? But I'm pretty sure there's some contractual agreement to where you have to let them hold your money for a certain period of time. But they're giving you a set monthly rate. So some people go to bonds. Some people invest in, I would say a lot of people invest into the S&P 500 first. A lot of people wait till this thing drop and then just let their money sit. But you personally, your best bet would be dividend stocks for sure. So you can make, because let's just say 2 million. 2 million, it takes about 1.5 million to make $100K. About a year, guaranteed. But if those stocks go up, it could be 300 to 200K.
Yeah, for sure.
Because I bought this stock called ExxonMobil, which is the actual gas station. I bought them for $40. Now they're at like $70, but I also make. So not only am I making about $4,000 a year in dividends, I also made $40,000 with the stock itself. You know what I'm saying?
Mm-hmm.
But the dividends, they're going to pay me that $4,000 a year for life, and they also reinvest your shares. Meaning, with that $4,000, well, with that $2,000, I get paid every quarter, right? So I really get paid about $8 grand a year off that, or something like that, whatever it is, right? With that $2 grand, they're going to take that $2 grand and they're going to reinvest it into more shares. You know what I'm saying? So you can put it to where it just keeps flipping for the rest of your life, and then you don't have to do nothing. So that's what I did for DC on Fly.
Yeah. And y'all see the free game, man. What's your Instagram?
My Instagram is Aristotle Investments. You can follow me on YouTube as well, Aristotle Investments, and then my Twitter is Aristotle Broker.
And what's the website they can go to learn more gaming?
So I do have a link tree on my actual Instagram page, but it's AristotleSignals.com.
Appreciate everything, my boy. We learned a lot, man. So we got some studying to do.
Nah, for real, I did that shit for DC though. That shit was hard. He showed me the account at the 85 South Show lab where you like, dog, you made me $120,000. I was like, dang, that was 5 months ago.
Oh,